Good evening, everybody. How are you doing? Um, how is it going? Let me allow you. Let me turn on the microphone. So, how are you doing? How are you doing? How is your reading going?
Very fine, sir.
How is it going? Please confirm that you can hear me. If you are hearing me.
We can hear you. Good evening.
We can hear you, sir. Good evening.
Okay, good. Makes sense. Yeah.
We can hear you. Good evening, sir.
Yeah. Good evening. How are you? So, if you're interested in being a co-host for this call before we start, please indicate by raising your hand. So, Florence, Victoria, and Gifts. Usual host, Abby, Florence, Victoria, and Gifts. Have you started reading?
We're trying.
Okay.
I can't hear anyone again. Oh,
No one is talking. No one is saying anything. No, that's why there is no sound.
Please, can you hear me?
Yes, we can hear you.
Mhm.
Mr. Bodi, what's wrong with my phone?
Ezra Ogbe, please mute your mic. Oh. Ezra.
Why is everyone talking at the same time? Please mute your mic. Oh.
Good evening, everyone.
Evening.
Good evening.
Good evening.
Okay, I can't hear anyone, so I wanted to be sure I'm not the only person.
No, the lecturer is
Thank you.
actually out. I think his network is remote.
Okay, thank you very much.
Mrs. Limon, can you mute your mic?
Now.
You're back now. We can hear you.
Okay. Sorry, I think the network is bad tonight. But not a problem. I'll find you in a bit. You're not. Uh, mm, all right. Some people said they have issues joining the call. I don't know. Okay, Ineka is now on the call, right?
Yes, um,
Okay, makes sense.
thank you.
So any yeah. So let's move on. Right, let's move on. So I just want to wait a little bit more. All right, I would have loved to. I'm trying to communicate.
Hello?
Hello, I can hear you.
I'm not hearing
Any?
anybody.
Can you hear me? Can you hear me?
Yes, we
Can
can
hear
hear
you.
you.
Okay, I'm somebody talking now. Abby?
Sunday for the Florence. It's as if our network is having issues.
Okay, I'm
Yeah,
hearing you
I
now.
understand.
I can hear you now.
Okay, that makes sense. Yeah,
But it's not edible enough.
it's not audible enough. Okay,
It's your network.
I think
Okay.
so.
Okay,
So let's
stop
move on.
talking.
Uh, so I'll mute everybody now. Let's get into the discussion of today. Yeah, but again, let me ask: do you have any? So far, so good. I have done company income tax. I've done what's the name? Sorry, can
Pioneer.
somebody send? I've done Pioneer. Can somebody send the Word document because my laptop crashed during the course of the week, so I don't have that document again. Can somebody just forward the document to this mail address, the the editable version, to my mail address? I'm sending it to the group. Can someone do that for me? Although let me do it myself. Just wait a minute. I think I can share with myself from my phone. Just hold on a minute. My laptop crashed on Tuesday.
Sorry about that, sir.
No problem. Thank you. But again, I'm stylishly waiting for others to join the call. Right. I think we're having a good number now. We are now 132. Right. Today is likely going to be my last class with you. I believe that you can bear me witness that we've done revisions, have we? Have you gained anything from joining this class?
Yes,
Yes.
you are good, sir. Yes,
Okay.
You have
So
done well, sir.
thank you. Thank you. So in case you have any question, the group remains very active. Just make sure that you okay, good. Partial disposal. That makes sense. Right. Yeah. Partial disposal. Amen. Amen to the prayers. I appreciate. All right. So today we'll start with partial disposal on hire purchase. Right. That's what we want to start with. Partial disposal on hire purchase. And then we'll also do okay.
transfer pricing, you see.
Okay, I also said I promise transfer pricing. Is that true?
Local taxation.
This night. Is this night I want to do everything like this?
Specialized business.
Social business, okay. Yeah, no problem. It's fine. Okay. We'll do it one after the other. Sorry, I'm very sorry for that delay. Very sorry. Does that very, very sorry. No, I've been talking since. All right, all right, all right. So let's on a scale of okay, let me get your feedbacks. I would share a Google form with you, an anonymous Google form with you just to get an appraisal of my classes. Uh uh just give me an appraisal, the good parts, the bad, the ugly. I know the network is ugly, so you want to crucify me on the network, I understand. But then if you have other things you want to note, really. So I will send if I ask you to talk now, I understand that I may not get a very good I'll be hearing a lot of good things, right? Because obviously it's good. I need the good parts to keep me moving anyway, because I'm not immune from but then I'll send the Google form. Please, I want your honest feedback, indicating areas you feel we can improve, areas you think I can improve, basically, areas you think I would have done better, some discussion parts. I know network is a general problem for me. I mean, for my first class, so I'm expecting you to say that. But if you don't say that, that's also fine, right? So, are you promising me you do that for me?
Sure, sure, sure.
All right, so please, I will send it after the class. Just a feedback form for me to, so at least you should help those who are going to be writing as that. Abi,
Yes, sir.
anything you promise me, anything you work on this, you tell me is something I'll be willing to work on against next diet, right? So please help me. Oh, all right. Please help me get that sorted. Sorry. Oh. This mail address, I beg. I'm not finding it. Okay. I'll be expecting somebody should please help me do that. Have you seen it? Okay, thank you. I didn't know what I meant. Remember? Okay, thank you. Okay. So minutes from now, I will start sharing my screen. Once it comes up, just tell me it has come up, please. Please also send the past question. Please share the past question with me too. The past question from that compiled one. All right. So today we want to do so far so good. We've done companies, pioneer, oil and gas, capital gain tax, mining, digital economy, transfer pricing, base erosion and profit shifting. Yeah, we've done so we are expected to do transfer pricing today, complete capital gain tax today, do specialized business today, do regional integration on trade blocks today, and also say to attempt international tax policy today. These are the topics I'm expected to do today. So that suggests to us that we are going to have a long class, right? A very long class at that. All right. Are you with me? So let's go with capital gain tax. Capital. Can you see my screen?
Yes, sir.
We can see your friend.
Okay. Yeah, we'll do the multiple tax if we have the time. The double taxation. But this one, all of you are saying double taxation. Have you seen what I'm not seeing? Capital gain tax. Really. And also, I will give you a what looks like a mock exam and the solution. What looks like the mock and solution, I will share with you a mock exam kind of and solution. I will share that with you, so you can just do that compiled one on your own and the solution. So I think that works too for you, Abby.
Thank you, sir. Yes,
Okay,
sir.
that so partial disposal. So last class we discussed hire purchase. So today partial disposal occurs right when a fraction of an asset is disposed. That's when you say there is partial disposal. That's a part of an asset is disposed, right? And so now, but please note that where you are transacting with connected persons, where you are transacting with, are you with me? Connected persons, that's person you are related with by blood or water, you adopt the market value, right? The market price or the market price of the asset and not the amount that the asset is traded
Please, can you
between
make the this thing
connect
load a little?
okay between connected persons, right? Between connected persons. So when you are selling, right? So you just consider the amount at which the asset is being. I mean, you consider the market value, right? And not the transaction between connected person. Now somebody shared this thing with me. Are you with me?
I
Have you
thought you've
shared?
gotten it.
No, I mean the past question.
Okay, let me.
I've been questioning me.
It's like we will still have to. I would. I will still have to mute everybody. I'm thinking I shouldn't, but the look of things, I still have to. So, all right. Hello.
We can hear
Hello.
you. Welcome back.
All right. Thank you. So again, can you see my screen?
You have not started sharing.
Not yet.
All right. So am I able to meet? Sure. Okay. Or are you available for a meeting on Saturday?
Yes. So
What time?
I usually 7 a.m.
yes.
Okay.
If you're available, we're available.
Somebody is saying CR in the comment section.
You see, as
Benjamin.
It's like they're having
Victor.
CRS.
Another person is saying case study. Wow.
Is it in the morning they're having theirs?
Yeah, I think they have CR.
all right, not a problem. So let's just move on. So let's just quickly solve this guy.
But
This
majority
is
seems to be available.
what is it?
Majority seems to be available. CR is 10 a.m.
They just confirm CRS 10 a.m. So we can have 2 hours before that time.
Okay. So what question is this? So let's quickly work on this question. That's question 4 for this diet. I'm just trying to confirm this diet. For May 2019, question 4. May 2019, question 4. Right, so who's reading?
Can we go to the requirement, please?
Okay, thank you.
They are required to advise the management on deemed disposal of an asset, the capital gain, if any, arising from these transactions. 3, the rollover relief, if any, on reinvestment made on acquisition of new asset by the company. 4, capital gain tax payable.
Okay.
Can we scroll up now, please?
Yeah.
With respect to the Capital Gain Tax Act CAB 2004 as amended, when is acquisition disposal effective? Symposium Nigeria Limited is based in Ibadan, Oyo State, and is into manufacturing of computer accessories. The company undertook the following transactions during the year ended December 31st, 2018. 1. Plant and machinery. Part of plant and machinery was purchased in year 2014 at an all-inclusive price of 12.5 million. Machinery was sold for 8.1 million, and the value of the undisposed part was 5.740 million. Selling expenses incurred amounted to 150,000. 2. A motor vehicle which was acquired in 2016 for 3 million for purpose of the business was sold to the company's general manager for 2.9 million. The market value of the car as at the point of disposal was 3.5 million. The company reacquired similar car for 3.5 million. Can you scroll up, please? Hello.
Yeah, I've screwed up.
Are you there, Mr. Michael?
Yes, I'm here. I've screwed up. Can you see it?
Yeah, I've read 2. No, it's not moving, I think.
Is this same for everybody?
What are you not reading the second one, motor vehicle?
I'm on number 3 already.
As a result of unfavorable
Yes,
business
I've read
climate.
it. I've read motor vehicle.
Yeah, the
You,
third
so
one is displayed.
Oh,
Can you
she's
see
not
it?
seeing it. She's not seeing it. Please go ahead.
As
yeah,
a
I can't
result
see
of
it.
unfavorable
Go ahead.
business climate in Ibadan, the company relocated to Ikeja, Lagos State. The land and buildings acquired in Ibadan in 2009 for 30 million were sold for 65,500,000. Cost of valuation and professional fee incurred on disposal was 2 million. A reinvestment was made in Ikeja through acquisition of another landed property valued at 50 million. Mapozu Nigeria Limited has just appointed your firm as the company's tax consultant. You are required to advise the management on
So
deemed.
we've read the requirement before, so I think we can just move on, Abi.
Yes, we can.
All right. So the question is saying that when should we consider deemed disposal, right? So what is deemed disposal? So deemed disposal, an asset is deemed to be disposed, right? Where there is death of the original owner of the asset, right? So are you with me?
Yes, we are with you.
So where the original owner of the asset is deceased, right? Then the asset is deemed to be disposed to the personal representative, right? Or to the personal representative of the asset, right? Or to anybody who is standing in the stead, right? So in that case, the asset will be deemed to be disposed to anybody who is the beneficiary of the asset after the demise of the original owner of the asset. Does it make sense to you? So
Yes.
in other words, we are saying deemed disposal, right? Are you with me?
Yes, we are.
So we are saying deemed disposal occurs, well, let me use the word the way we used to say it. An asset is deemed to be disposed upon the demise of the original owner of the asset. So thus the asset shall be considered to be disposed to the personal representative or any other person who acts in that capacity. Are you with me?
yes.
We are with you.
So the asset shall be deemed to be disposed at the market value of the asset in an arm's length transaction. That's what the disposer is talking about, basically. Right? So with that, we've answered the first part. The second part, the capital gain tax arising from any of these transactions. So let's compute capital gain tax. So the first asset that we have is plant and machinery, Abi.
Yes.
So So let's just do this. Don't right. The asset was sold for how much? 8.1 million. Can you hear me?
Yes, we can.
Yes.
Cost of acquisition. Right, let's cost of acquisition. So how much is the cost of acquisition? The cost of acquisition of the asset, right, will then be what is the bone of contention. So the cost of assets is determined as A over A plus B times C, where A, the sales proceeds of the portion disposed. B, the market value of the undisposed assets, right, or undisposed portion. Are you with me? And C,
Yes.
the cost of acquisition of the asset. Cost of acquisition of the asset. So if you want to adopt the formula here, you will then say your A, what's the sales proceeds of the portion that you disposed? You have 8.1 million, Abi,
8,000. Yes.
divided by 8.1 million plus was the portion that was undisposed?
5,740.
540. Then multiplied by what is the cost of the assets? 12,500.
5.
So what do you have? What do you have? Please help me. Press it, please. Right there.
7.315.
7,315. Do you have 7,315? Does it have any points in front?
0.75.
75. 75.
0.75. Like this, Abby?
Yes.
Yes.
Less cost of acquisition. So this amount we computed becomes the new value of the asset. So we typically have 751. Sorry, 73.
Low.
Yeah, I'm with you. 7,315.75. Abby? 0.75.
Yes.
Then you have selling expenses. So how much is the selling expenses for the asset? The selling expenses incurred was
150,000.
0.0. Abby? So when you add the two together, what
Yes.
do you have? 7,
7,465. 75.
465.75. So in that case, you now have your, what's the name? Capital gain. How much is that?
634.24. 0.25.
So
0.25.
your CGT at 10%. What do you have? 63.
63.42.
Or 3.
Let's just leave it as 3 decimal. 435.
43.
So that's that about the first one. So the second one, you have it on motor vehicle, capital gain. For the purpose of the business was sold to the company's general manager for 2.9. So that is a connected person's transaction because it was sold to the company's general manager. So the general manager is an employee in the same organization. So that's a connected person transaction. And we said in the case of connected person, use the market value of the asset. So the market value as at the point of disposal was how much? 3.5 million. Abi?
Yes,
Less
3.5.
cost of acquisition. So how much is the cost of acquisition of the assets? It is acquired for how much? 3 million, Abi.
Million. Yeah.
Selling expenses, no selling expenses, right? So what is supposed to be the
Mm-hmm.
supposed assets? The supposed capital gain tax. Capital gain, beg your pardon. Not the
500.
tax.
500.
So 5.
500.
But then the amount was the company required similar car, right? So because the company
Yeah.
acquired similar car, then you have to determine your. So the company sorry, are you me? The company acquired a
Yes.
similar car. So because they acquired a similar car, and was it for the same purpose? Yeah. So there's need for us to compute rollover relief. Determination of rollover relief, right? But then in the case of connected person, should there be rollover relief? All right. No, there shouldn't be for connected person transaction. Just remember that. All right. So that will be your capital gain. Then your capital gain tax at 10%. You have what? 50,
50.
right?
Yeah.
Then you have capital gain tax on land and building, Abi. All right. So as a result of unfavorable business climate in Ibadan, the company relocated to Ikeja, Lagos State. The land and buildings acquired in Ibadan in 2009, they are acquired in Ibadan in
Sorry,
2000.
we have some questions. Is there a need for rollover relief on a car?
No, there's no need for rollover relief on a car.
Or can you have okay.
All right. There's no need for rollover relief on a car. It's not part of the 3 classes of asset that you have. All right. So as a result of unfavorable business climate in Ibadan, the company relocated to Lagos State. The land and building acquired in Ibadan in 2009 for 230 million were sold for 65.5. So you have sales proceeds 500, right? Less cost of acquisition. How much is the cost of bought for 30,000, and then you have some other incidental costs. Incidental cost, how much? So you have incidental costs. Cost of valuation fee was 2,000. So you have incidental. Hello, are you with me?
Yes, we are with you.
All right, so you have capital.
Started seeing the screen now.
Can you see my
I think he
screen?
just came back. Went off. Yeah, it's back now.
Capital gain. So the supposed capital gain is how much? How much is the difference? Well, how much is the difference?
33,500.
33,500. But the amount was invested, right? So you less roll over relief. So how much is the rollover relief? We said the lower of sales proceeds, that's 65,500, right? And the
Yes,
amount invested, how much was
50,000.
invested? 50,000. So which one is lower?
50,000.
So you pick 50,000, Abi.
50,000.
So
Yes,
less cost of acquisition, right? Are you with me?
yes,
So how much is the
Yes.
cost of acquisition of the old assets? 30,000 baht.
Yeah, 30.
So if you do that, what do you have?
Right.
You should have 20,000, Abi. So the 20,000 is the rollover relief, right? Are you with me? So you
Yeah.
now have capital gain. That's 13,500. Then CGT at 10%. What do you have?
50.
31,350. Abi?
Yes, please, before we go further, there are some questions in the chat. What are the three classes of assets subject to rollover release?
So you have your land and building, plant and equipment. So let me just get that across. So you have land and building, that's class one, the incorporeal assets, and then your plant and equipment class.
class 2.
Does it make sense? Yeah, so you have class one.
Your network is breaking or you're not talking. We cannot hear you. Oh, God.
So you say sorry. Hello.
Welcome back, Cole. We lost you for some minutes.
Okay, sorry about that. So, did you hear the class of asset I mentioned?
You were breaking. You can just take it again.
Classes of assets. You have your class one. You have land and building, and land and machinery. Class two. You have your ship. Class three. You have aircraft. Class four. Right. Then you have goodwill and other incorporeal assets. All right. You got that? You got that? Hello.
Yes, we got that. Thank you so much.
It's like my stepmother is available this evening. No, it's up now.
We bind her in Jesus' name.
Amen. Fire. So let's go ahead. All right. So do you get the gist to this extent? Do you
Yes,
get
we've
the gist
got
to this
that.
extent?
Thank
So I
you.
believe I believe with this now we've been able to deal with rollover relief. We've illustrated partial relief. We've illustrated the full relief, and we've illustrated the no relief, right? So this is also a partial relief, right? This is a partial relief, and that's, remember, we said partial relief is when the amount invested is lower than the sales proceeds of the asset. We've illustrated the no relief in the previous class. We've done higher purchase already. Is that correct? Yeah. And then we've illustrated partial disposal of an asset. And we've illustrated transactions between connected persons. Transactions between connected persons. So I think with that, we're good to go on capital gain tax. Is that correct?
Yes, sir.
Okay. So if that's correct, let's move straight to our next line of action. it is specialized business, right? I'm going to be a little bit, but again, on your own, you may want to read about options. It's a very straightforward stuff. Options. You may want to read about options, about capital gain tax options, right? But if time permits, I will still solve one question. If I see one question that I can solve, so let me move straight to specialized business. Taxation of specialized businesses. All right, taxation of specialized businesses. So, word, we have what are specialized business? That's the first question you want to ask. Specialized business are those kind of business that do not do their business or they do not operate in a conventional way, right? So they do not do their business like every other person would typically do business. They don't follow the conventional way of doing business, right? So there are various types of them. We have transportation, two, telecommunication, three, we have banks. Number four, we have you have unit trust scheme. And number five, you have what? Unit trust schemes, banks, then you have insurance companies. Does it make sense? So those are the five classes, right? I believe strong that if for anything the examiner cannot test insurance company because it's a little bit strict. Also, you have I've treated agricultural companies. It was linked with Pioneer, right? And that's what's the major thing. They're just like mining. Their major issue there is agricultural companies are also under Pioneer list, so they typically have tax holiday, right? And plantation equipment will have 95% initial allowance and 0% annual allowance. But there's one peculiar asset to these agricultural companies. It's called ranching and plantation. That's one thing. That's one other thing that is very peculiar to them. And ranching and plantation is the cost, is the initial cost of settling up the farmland, basically. IS40 is investment property. Can you hear me?
Yes, we can. But you went off. Oh, your network seems to be really bad.
Sorry about that. How about now? Is it a little better?
Yes, we can hear you now.
All right, good. So I was talking about IS41, right? IS41 is biological assets, right? Is biological assets, and one of the things IS41 is saying that where your assets, where any cost that will last for more than a year, like should be capitalized. Remember, so your biological capitalized. That's your bearers plant should be capitalized in accordance with IAS 16 and all of that. But that's not my major discussion here. My major like cost of nursery.
Network.
Are you with me? Purchasing animals for rearing and all of that. So those are called ranching and plantation, and they have 30 and 50% annual allowance. Right, that's one thing that is so peculiar to agriculture. But every other thing, Pioneer will solve it. They're under Pioneer, and CIT will also suffice. But I just thought to bring this to your notice. So let's deal with transportation and telecommunication. Can you hear me?
Yes, we can.
All right. So transportation and telecommunication is what we want to really look at. So what is the model about transportation and telecommunication? You know that they are basically moving. It's the movement of information for telecommunication, and for transportation is the movement of people from one place to another. So their business will typically look alike, right? So what are the steps in determining tax liability for transportation and telecommunication? Steps in determining tax liability for transportation and telecommunication. So in that case, you would typically have what is called, I gave an acronym, GNGD CAT. If you understand this GNGD CAT, then your problem is solved already. That's simply the steps in determining the tax liability. What is the step again? GNGD CAT. Do you all get GNGD CAT? If you all get GNGD CAT, please thumbs up. It's just the simple formula for it. GNGD CAT, right? Okay, good. So let's move on. So what is the first one? Determine the global income. The G there is the global. Determine the global income, and the global income is the income from all sources, right? Is the income from all sources. The second one is determine the Nigerian income. The N there is the Nigerian is the income that is generated from Nigeria. Emphasis on from Nigeria. Of passengers from Canada to Nigeria, it is still not a Nigerian income.
We can no longer hear you. Thank God, I beg.
Sir, we
He's no
cannot
longer
hear
on the
you.
call. He's no longer on the call.
We can't hear
God,
you,
I
sir.
beg. Yes, we will pass this exam.
What was the last thing you had?
If you take from Canada to Nigeria, they are not still a yeah, they are not still a Nigerian business.
Okay. So you said GNGD cat, right? So determine the the G there now is determine the global adjusted profit. Determine the global adjusted profit. Then the D there is determine the depreciation ratio. Depreciation ratio is global depreciation over global income times 100. That's the formula for depreciation ratio. The C there is determine, are you with me? The capital allowance. And the capital allowance is the depreciation ratio times Nigerian income. Then the A here is determine the adjusted profit ratio. Right, adjusted profit ratio. Adjusted profit ratio is your global adjusted profit over global income Can you hear me? Are you feeling it?
We are hearing you.
All right, good.
But most
So
of
that's
people
the
I don't know if it's the general network. The network tonight seems to be somehow.
Is it for me or for everybody?
For you and
The network
quite a number of so for you it breaks at some point, and then when you're back, I think others will now start experiencing it.
Yeah. uh so determine the adjusted profit ratio. That's global adjusted profit over global income times 100, right? Then the A there is determine the Nigerian adjusted profit. The Nigerian adjusted profit. That's the next A. Some people tell me that this format is long, but it's the simplest because I can put the format to it and then move on with my life. And that is your global adjusted profit ratio multiplied by Nigerian income. And then the last one is determine the total profit and tax liabilities. Does it make sense? Are we
Yes.
there?
Yes.
Good. So we're good. So that's basically specialized business. That's what specialized business is actually speaking to. So let's quickly look at this one. We have transportation. So let me just, before we get there, let me just quickly cite this. So this will work for 4 types of business. It will work for any business that does air, sea, wire, and cable businesses. So air and sea speaks to your transportation. Wire and cable deals with your telecommunication. But anytime you see a transportation business or a telecommunication business that you are asked to determine tax liability, then you'll be required to follow your GNGD card rule. Does it make sense? I hope by now you've been able to fix your GNGD card. It's a very, very simple stuff to fix there, right? No, any questions so far? Any questions so far? It has not been tested
So
since the
yeah, I was just
yeah.
about to say from the summary that Apex has, I cannot trace the question.
Yeah, so that's I know it's in your syllabus, but it has not been tested for a while. It has not been tested, but so let me just go to one and see if I can see one of those. Airline. Okay,
Okay, they want
so let's
you
go.
to show the steps in determining the tax abilities again, but it's on the
So
screen. I don't know if they can see it.
so
Maybe you should
the
expand
steps
it.
are the steps are GNGD cards, GNGD cards, G global income, N Nigerian income, G is the global adjusted profit, D is the depreciation ratio, and depreciation ratio is global depreciation over global income times 100. C is the capital allowance, and the capital allowance is a depreciation ratio, right, times the Nigerian income. The depreciation ratio times Nigerian income. Then your adjusted profit ratio, which is your global adjusted profits divided by your global income times 100. And you determine Nigerian adjusted profit, which is your global adjusted profit ratio times Nigerian income. And finally, you determine your total profit and tax liability. All right, so that's basically it. So let's move on to look at this guy. So you want to read? So this is
Chief
what it has not been
Bonnie,
tested before. Just check the diet so that we can for traceability. So we have May 2018 question. I think question 6, Abby. It has not been tested since the start based diet. Okay, so let's go.
as a tax consultant, you are required to prepare computations showing a total of the Airlines Limited for Nigerian tax purposes. B. Company's income tax liability for the relevancy of assessment. C. Tertiary education tax liability. And this one's up 2 and 1 marks. Wow. Chief Bonnie
Okay.
Chizaram is the chairman or CEO of Chizaram Group of Companies. The conglomerate operates in several states of Nigeria. The group's area of business interest spans across supply of building materials, transport, and banking. In 2012, at the instance of the chairman, the group decided to diversify its business into some African countries by floating Obi Airlines Limited, which was incorporated in Ethiopia. On May 25, 2016, as Chief Chizaram was in the executive lounge of Muritala Mohammed International Airport, Lagos, awaiting departure, he met his longtime friend and business colleague, Chief Roga Menkiti, who is also an entrepreneur. During their discussion, Chief Menkiti wanted to know how beneficial it would be to him should he decide to invest in Ethiopia. His areas of concern are mainly companies' income tax and tertiary education tax payable in Nigeria, assuming he decided to start an airline business in Ethiopia. Meanwhile, the financial results of Obi Airlines Limited for the year ended December 31st, 2015 are as shown below. 1. Income from passenger flights on other routes. income from cargo loaded into aircraft on other routes, income from passenger flight from Nigeria, income from cargo loaded into aircraft from Nigeria. Deduct depreciation, staff salaries, general provisions. Can you scroll a bit? Lecturer, can you scroll down a bit, please? Oh, we can't see him again. Yeah. Okay. Additional information. Yeah.
Maybe you should continue reading.
I should continue reading.
Yes, Abby. See, we will come back.
Okay, the question is May 2018, question 6.
Yes.
Ibrahim, May 2018. So the net profit. Additional information included the following. 1. Capital allowances were agreed with the relevant authority at 110% of depreciation charged. 2. Other expenses include disallowable expenses of 425,000 naira. That's all the question. So we still
Okay.
need. Okay, it's back. Thank God.
So let's get into it. So the first thing is you determine the global income, have you?
Yes.
And we said your global income is the income from all sources. So by that we are saying your global income is how much? 536, right? 288, 205.
205, yeah.
That's your global income. Then you have your
Yeah.
Nigerian income, right? And your Nigerian income is how much? Nigerian income is income that is generated from Nigeria. So now we have income from passengers flight on other route, income from cargo loaded into aircraft on other routes. That's not Nigerian income. Income from passengers flight from Nigeria, that's a Nigerian income. So we have income from passenger flight, right? You have 54 million, Abi. 54401. Can you hear me? 27.
Yes. 275.
Then you have income from cargo. How much is that? 49,938.
180.
180.
What's the total? How much is this? How much do you have? Please help me. Please help me.
Is it including the global income? Are we adding all? Only Nigerian?
No. It's only Nigerian income. They are different. This is step one.
Okay, Nigerian is
Step one.
104,339.
This is step two.
104,339.
104.
455.
104.
104,339.
455, Abi.
455. Yeah.
All right. So step 3, what do you do? Determine the depreciation ratio, Abi. Depreciation is your global depreciation. So how much is depreciation here? 1, right?
974.
Equal to 1,934,125 divided by what? What's the global income? 536,288,215 times 100. What do you have? You're expressing it in percentage. So what do you have?
I have 0.368. That's like 36.8%.
It's not up to that. Did you after multiply by 100? What do you have?
Yeah, 0.368 now.
And that's
Okay, that's 3
0.37.
point. Yeah.
That's 0. Yeah. So right, the next thing you have to do is to determine your global adjusted profit. Determination.
But can we do we have to follow the acronyms like step by step
No,
or
no, you
okay?
can just do it by adjusted profit. It's not
Okay.
composed actually, but I just like doing this way just for my thoughts because that's the way I knew it. So so as not to make sure I miss it up. That's just stuff. But it's not
Okay.
compulsory to do it that way at all.
All right.
So you have your net profit, Abby. How much is net profit? You have 519, right?
145.
145, 149. Add the salable expenses, right? What are the labor expenses that you have? I have depreciation, right? 1,974,125. Then I have general provision. How much is general provision? 215,050. What other additional information do we have? What are the salary expenses?
425.
425. So what's the total?
2614175.
17 what?
5.
2614,175. So how much is adjusted profits there?
Can you scroll so we can see this?
Help me. Oh.
516. Are we adding?
We are
Okay, add
adding now.
back here.
Is
Yes, 521. We're not less. Yeah.
516.
Sorry.
530.
521.
yeah. 521. Oh, yeah.
521 759
I see my
324.
screen. I see my screen.
Yes, 759,324. May 2018, question 6. Abdurrahman, which year 2018 May? You already said the year now.
All right, step 5. Are you with me?
Oh, it's you.
Step 5. After determining the position ratio, determine the capital allowance. All right. What I would advise you is always be careful of reading the question. If they've agreed, please don't say they do not agree. Oh. So here now they told us capital allowance were agreed at a particular amount. So anytime the capital allowance is agreed, this agreed capital allowance supersedes anything you compute as your depreciation ratio. Does it make sense? So it
Yes, it
supersedes
was.
times. So how much is being charged? 1,974,125. You got me now.
2109153.
Yeah. 2109
153.75.
153.75. So that's the next one. Capital
Am I
allowance.
correct like this? Hold on, no. Let me confirm again. I don't think that's right. 174. 2171,537.5.
2171.
Yes, 537.5. 2171,537.5.
537 point 217,537.5, right? So
Yes.
step, are you with me?
Someone said you should show the adjusted profits. Then another person says the rule on agreed capital allowance over depreciation. Can you come again?
So the
Okay,
rule
can
is
you
that
write it?
any
Can you write it on the notes so that we don't
so
forget?
where there is an agreed capital allowance, the same supersedes the I'm gonna display that instead. The same supersedes the depreciation ratio and that was initially imputed. All right, that's the idea there. Step 6, right, is the adjusted profit ratio, right? And adjusted profit ratio is what's your global adjusted profit
Over global.
over global income times 100. So what do you have now? What's the adjusted profit? 521,759,324 divided by what's the global income? And then times 100. What do you have?
97.3.
97.3%. So The next thing is to computation of Nigerian adjusted profit and let me just do tax liabilities. So let me just have it like that together. So you have adjusted profit. How much is adjusted profit? You have 97.3% is the adjusted profit ratio, Abby, times the Nigerian income. What's the Nigerian income? 104. So times this. What do you have? I learned that some of you have deleted that file in the process of downloading it. Some of the class files that were uploaded for you. Anyway,
Yeah, so but I think they are back up now.
you think what?
Hydrocarbon tax was not there. I think they are back up now. I think it was uploaded again.
Yeah, we uploaded it again.
Thank you.
Now to
Some of us
do
have watched. I got 101,522. Is this correct? Yeah.
101
101,522,829.
829, Abby.
289.
So less 289,
89
Abby.
and 7. Yes. 101,
0.7.
522, 289.
So less capital allowances. How much is the capital allowance? Right. So what do you have? As your total profit. How much? Help me. Don't consider my bag.
99,350.
99.
99,350,752. 752.
I didn't get you.
99,350,752.22.
So
752. Yeah.
0.2, Abby.
Yes. 222.
So CIT at 30%. Please note that Nigerian income is what informs the tax rate to be used to. In case you have a question in the most recent form, the Nigerian income determines the tax rate. Do you understand?
Yes, sir.
Nigerian income determines tax rate. All right. So how much?
29,29805 225.6.
Then TET at 2%
You can
of
2.7. Sure.
You can say 0.7 is 66.
2.7. Thank you. What's TET?
2% of accessible profits.
Yeah. Don't forget that adjusted profit is same as accessible profit, right?
2030 445.
20304.46.
Yeah, 46.
20304.
46. No, 2030. 2030.
That's 20.
Yeah, 446.
Right, so that's it. But for this TET, you have to be careful because any business that is not registered in Nigeria, that does not have a fixed base in Nigeria, is exempted from tertiary education tax. Right, so it's something you want to be careful of to check whether the company is incorporated in Nigeria or not. Right? Does it make sense?
Yes, it does.
You should expect to still inform them that because the company is incorporated in Ethiopia, the company is exempted from tertiary education tax in Nigeria. That's one thing you want to tell them. Does it? All right. Any question, please? So let's permit our first round of question. So, presenter, host, any question?
A lot of the question here
Somebody
are
wants you to recap.
Recap, like specifics.
Ezra, do you have any specific question in mind so that we can move
One
to
said you should recap the capital allowance, how we arrive at 110%.
So 1.0% was given in the question. 110% was given in the question. So we said that anything they agree on will inform how we compute a capital allowance, right? So if the examiner is silent, your depreciation ratio determines the capital allowance. So you do the determination, you do depreciation ratio multiplied by whatever you have as your Nigerian income. But in this case, you are given an agreed amount, right? So the agreed amount is what determines the capital allowance at the end of the day. Do you understand? So what I'm saying is the agreement supersedes whatever you are doing. No, no. I didn't care. It is on the Nigerian income, not Nigerian adjusted profit, not the global adjusted profit. It's on the Nigerian adjusted profit, not the global adjusted profit. All right. So we have five people who have raised hand. So those five will be called. But then, do we still have any question again in the
someone
chat?
wants you to explain the rule of TET, the last rule that
So,
you mentioned. Yeah.
so I was saying, I said that in case the company is not incorporated in Nigeria, if the company is not incorporated in Nigeria or has a permanent establishment in Nigeria, then such company is exempted from. All right. So any other question?
I
The
have
court.
one, please.
Angela,
Hello.
I can't hear you.
Can you hear me now?
I can hear you.
Okay, please, just a quick one. You were saying that when under that capital gain, that if it involve a related person, the what's it called, the market value will be used.
Yes.
So my question is, if it doesn't involve, do we use the actual cost it was sold for?
Yes, the sales process suffice.
Okay, thank you.
You're welcome. All right. So what I'm saying is, for companies not incorporated in Nigeria or does not have a permanent
Okay.
establishment in Nigeria, then such companies should be exempted from TET in Nigeria. So that way you don't compute tertiary education tax for such company. So even if the question requires you, I mean, just the one line or two line in your notes will do to explain that, okay, well, this company is exempted from TET, right? Another question, cost. You done with those who raised hand? Those who, okay, there's no one. You've attended to everyone, right? So I mean, this quick Q&A session will end 10:05, so you have to be brief so that we take more questions. You have to be very brief. 10:05. So I start with
I'm here.
no, you are not the first to raise hand. It's based on those who raise their hand. So I will call you, don't worry.
Okay.
So we have Omobukola. Omobukola. Okay, see me. See
Good
me.
evening, sir.
Okay.
Sir, my question is on CGT. I read somewhere that that market value is the higher of the market value um and
And
the
the says and
actual
the
cost.
disposal.
Yes,
Yeah,
yes.
that's
Because there's
correct.
sometimes
But
that it is sell in
that's correct. But typically, your market value is typically going to be higher than the sales proceeds at the end of the day between the related party or between the connected persons.
but in cases where the it is sold higher or equals to the market value.
So if it is equal to the market value, so just pick anyone since it's equal. But where the what's the name now? The actual amount of disposal between connected persons now higher than the market value, which typically should not, right? So then you use that.
Okay.
All right. Yeah, Kemi.
Okay, good evening.
Yeah, good evening,
Good
madam.
My question, I want to know the basis of using 2% for TET.
So it's because it's 2018.
Okay, thank you, sir.
You're welcome. All right, Silas.
Okay, good evening, sir.
I
Yes,
agree
and my
with you.
question goes to insurance aspect on specialized business.
Mm-hmm.
Then higher purchase. I want you to throw a little, a kind of light on that. Thank you.
I'm lost to which one are you asking exactly? Is it the insurance business or the hire purchase?
Okay, the questions are two. One is insurance business. In fact, the ICANN has not really tested anything on that. I don't know
It
what's your opinion. Do you need to concentrate on that?
ICANN cannot
Then
test
again,
it.
you just throw a
ICANN can
little light on the higher purchase.
okay. ICANN cannot test insurance because of its complexity. The test insurance company, you will not leave the exam even within the 3 hours, except if it's the only question that is tested. So because of the complexity, you have the life assurance, you have the general insurance, you have some rules that guides their investment income and all that. I will share the notes I compiled with you on that. You may want to read for information, but I'm sure ICANN cannot text that. Test what's the name now? Cannot test our purchase. For the for the insurance I mean, oh, Now for the hire purchase, I think I did the hire purchase last week, right? So it's basically that you have to remove the what's the name now? What's remind me? The interest element. You have to deduct the interest
Okay,
element
the interest
from the
portion.
yeah, the interest portion. You have to reduce it from the hire purchase arrangements because, of course, it is the amount less the interest that is qualified as a liable deduction under capital gain. The cost of acquisition of purchasing the asset is going to be less the interest element of it. Do you understand? So in the case where an asset is lost, right, and you now
All
get
right, sir. Thank you.
you welcome.
I'm okay with that.
Okay, that's fine. Right. In the case where an asset was destroyed or lost and compensation was received from insurance company, right? What's the treatment for this? So the your claim that you receive from the insurance company will become the sales proceeds. That's just the peculiarity there. Everything remains the same, but in this case, the compensation, the claim you got from the insurance company becomes the sales proceeds. I hope you're able to get that, Aisha. Does it work for you? Is that fine for you? No any complexity there. Just that the compensation received will suffice as the sales process. In the case, thank you for reminding me that important part of this capital gain tax. Right. I hope you all understand what I just said about that uh, claims received.
No, can you recap again,
Okay.
please?
So what I was saying is that in the case where an asset is under the contract of indemnity, right, and the asset got burnt down or anything, life happened to the asset, right? So in the case when life happened to such asset, the claim you get from the insurance company or the compensation you get under the contract of indemnity becomes the sales proceeds for the asset. So you still compute capital gain tax, but the claim becomes the sales proceeds. Is what you use instead of the amount that it can be sold. All
Okay,
right.
thank you.
Bukola.
Yes.
Okay, good evening, sir.
Okay.
Hi.
Good evening.
Okay, Nicola, sir.
Okay, please, my question has to do with what's the call. Number one, I want to know if this TET, are we calculating it with Nigeria's adjusted profits? That's number one.
Yes, Nigerian adjusted profits. That's
Okay.
number one.
Okay, please, number two. This you said under C, determine the capital allowance. You said it's depreciation times Nigerian income, right?
Depreciation ratio times Nigerian income.
Okay. Depreciation ratio times Nigerian income. Okay, because I'm trying to look at how you calculate it on under step 5.
So
You
what
use
happened now? What happened is that they gave us a capital allowance agreed. So
yeah.
anytime they've agreed, so their agreement supersedes your depreciation ratio.
Okay.
Yeah, that's it.
Okay, we multiply it times. Sorry, that capital allowance is going to be the percentage times the real depreciation amount, right?
The examiner guided us to do that. So the exam, if he's suggesting anything, is going to guide you on how to go about it. So there's no rule particularly for that. The man told us that the capital allowance agreed is 110% of depreciation charged. So it means you should do 110% of depreciation. If this agreeing, is going to guide you on how to do the agreement.
Okay. All right. Thank you very
Yeah,
much.
you're welcome. Oluchi,
Yes, I'm here. Good evening once again. Okay,
I
sir.
cannot hear you.
I'm here, sir. Good evening. Can you hear me? Hello?
I think it's his network. I can hear you, Oluchi.
Okay.
Hello,
Hello,
can
sir.
you hear me?
Hello, sir. Yeah, I can hear you, sir. Can you hear me?
We can hear you.
He has to hear me because he's the one that will answer me. Hello, sir. You lost your network connection. Can anyone hear me?
Oluchi, we can hear you, but the teacher cannot hear you. So you still have to.
Yes, I can hear you.
I think he lost his network connections.
Yes.
Okay, sir, can you hear me now?
Maybe it's using Glow.
Maybe, he's in Abuja, and Abuja can have network issues.
All right.
Hello, can you hear me?
Yes, I can hear you, sir.
Yes,
Okay,
we
please
can
go ahead.
hear you.
Okay.
Sorry about that.
Okay, sir. My question is on capital allowance and depreciations. Like in the question we're solving now, we've been given clue to how to determine the capital allowance. Okay, the capital allowance was already given, and we were given the clue to determine the depreciation. What about in a scenario where we're not giving clue to determine depreciation? What do we do, or capital allowance? I don't know, help me recall. There's this other one that has to do with capital allowance and depreciation when either one is not given or one is given, something like that.
So, in case you are not given, what you just need to do is very simple. Just do your depreciation ratio multiplied by the Nigerian income. That's what you do.
Okay, fine, sir. Depreciation
Yeah.
ratio multiplied by Nigerian
And
income will now give me the capital allowance, Sabi.
exactly.
It's
Yes.
okay. Thank you, sir. Thank you.
You're welcome.
Thank you.
All right, Latifa.
Hi, good evening.
Yeah, good evening.
I just want to confirm for motor vehicle, you say rollover is not applicable for it, right?
Yeah, he's not part of the class.
And so for this minimum tax computation, is it only applicable for company that make loss?
No, not only companies that make loss. So I will always advise you to always compute minimum tax in the question. Always compute it. Right. So provided the company is not specifically exempted from minimum tax, then you should compute minimum tax.
Okay, what are the companies exempted from minimum tax?
That if okay, I will say it again. You have companies with 25 million naira, less than 25 million naira income in a particular year of assessment. You have companies with within the first 4 years of commencement, and companies in the agro-allied industry. So those are the three companies exempted from minimum tax. When if it does not fall between those three categories, then we're good. All right. Have I answered your question?
Yeah, thanks.
You're welcome. Judith. Judith. Okay. Elizabeth.
Good evening. Sorry, good
Okay.
evening. Can you
Olive.
hear me? Sir, I'm talking.
Elizabeth, I couldn't hear you.
Hello, can you hear me now?
Yes, I can hear you. Please go ahead.
Okay, sorry. I just want to ask, like the specialized business, how possible it is to be tested this diet?
I'm not the examiner. Oh. So you just say that.
All right, just want to be sure.
But it's something you should look at.
All
But I
right,
need to
all right.
examine it. All right. So,
There's a question in the chat.
okay. Okay.
How can I treat higher purchase capital gain when the last installment was not recovered before the IRA died?
So in that case, if the last installment is not recovered, so just compute the installments prior to the debt. So the total installment before the debt will be what you consider before computing your capital gain. Does it make sense? So your cost of acquisition, basically, it is going to be higher purchase multiplied by whatever you have. Does it make sense? So what I'm saying in essence is this. What I'm saying in essence is this. So if the higher purchase number of installments paid is 12, for instance, so you do 12 installment payment, right? Then you deduct the interest portion on the 12 installment payment, but you don't include the amount that was not recovered. And that is what you compare with the sales proceeds to determine your capital gain and then capital gain tax, as the case may be. All right. So let's just continue. I'll answer other persons in the next round of
Sorry,
question.
excuse me, please. I raised up my hand. I was the first person that raised up my hand. I don't know why my hand got lower.
Yeah, you handle like that's Suliat, right?
Yes.
Called you like 25 times. You didn't answer me.
Oh,
You went to it.
no, I didn't hear that part. Very well.
Okay.
So can I ask my question now?
Yeah,
Or
go ahead, go ahead.
okay, thank you. Sorry, the minimum tax. I didn't get that part of the minimum tax. Are we supposed to compose minimum tax, and why have we not composed minimum tax for this question that we just saw?
For this guy, so typically the examiner did not require you to complete minimum tax. So I think you shouldn't for specialized businesses, but you should compute basically. But it's not necessary, it's not necessary in this case because based on the requirements, that's just the reason. But if a company is not part of the three companies I listed before, then ideally you should compute minimum tax for them.
Okay. Then yeah, secondly, please. For under oil and gas. I'm quickly
Yeah.
like that. Under oil and gas, you see, there's this part of expenses that says royalty.
Yes.
Under royalty, and I think it's an expense. There's this part that says crude oil sold and local export. Is there
Local and domestic, local and foreign.
yes, is there an allowable expense
Yes, both of them are allowed.
for
Royalty is
both
generally allowed.
TIT and HCT?
Yes, they're allowed.
Okay, just a second, please. Okay. Also, yeah, okay, I think you've confirmed stamp duties for me. Stamp duty is allowed for hydrocarbon,
For
it's allowed for
hydrocarbon works. Yeah, that's it.
okay. Well, okay, before we finish class, I'll bring more questions. Thank you.
All right, no problem. So let's move on. So I will answer in the next round. Yeah, one thing you want to check out again is the unit trust scheme. That has not been tested. All right. It has not been tested, but let me quickly, I just feel it's something it's something you want to discover. Unit trust scheme is basically how your mutual fund will typically operate. Too. I think I have it on my phone. Hold on.
Bongo say Salah.
Salah.
Mm.
Hello, everyone.
The lecturer is out again, so today, not today.
Please, Ario. Hello? Hello, can you hear me?
We can hear you.
Ario, please, that's capital allowance. How did you guys compute it that you got that 217? I'm pressing my calculator, it's not giving me the same figure.
Did you multiply by 110%?
110%, meaning it to be 1.1 now.
Yes.
Times the amount.
Yes.
Times 104,339.
It's 110, not 110.
Please,
Yeah,
if we should beg the lecturer to drop the solution or the working notes as SFM they do for us now. Please, it's very important because it's very fast. I'm not even following. I don't even know how he gets all those figures. Please, if you can help us as we are revising the listing, to be able to know how he solved it. But this one, he doesn't drop this working out.
But the solutions are in the group chat. Every question was solved. We have the solution in that PDF that is being shared. So you update
Ario.
them. Yes, we'll come on with you.
Okay, please. The depreciation rate is multiplied by, is it not Nigerian income?
Was it Nigerian income? Also, I want
Okay.
one check. Let me check. Yeah, I think it was Nigerian income. Yes.
Okay. And I'm getting 114. Okay.
Hello.
He's back. Oh.
Okay, thank you.
Hello.
We can hear you.
Can hear you, sir.
Hello, we can hear you.
The network is bad, actually. I'm very sorry. But I shared 2 documents with you. Have you seen them?
Yeah, we have seen. You say 2 or 1?
2.
Only one has dropped, the tax reporting and tax accounting and reporting.
Okay. All right, so let's move on.
Please, can you show the solution?
Okay. You should have dropped by now. Oh,
Bongos. Yeah, this one.
so visit. So I just want to share. I want to solve unit trust scheme with you. I want to just share. It's a very short one before we then go to double taxation. I think it's double. You can read up regional integration and trade blocks on your own. I will share the notes on regional integration and trade blocks and any other thing. I will share. You have it saved in the summarized note, I believe, and international tax. So has it dropped?
Yes, it has. Thank you.
All right. So you want to see the other ones you have there, basically. But let me just quickly do the unit trust scheme question there.
Sorry, where are you dropping
Like
it?
in the group now.
Okay, in the group WhatsApp.
Yes.
Okay.
All right. So
Okay. Thank you. They've dropped.
is that it?
Yes, it's there. They are there. Tax accounting and reporting and taxation of specialized
Business?
business. Yeah.
Okay. All right. Thank you. So just a recap. I've not done something recap about. I've not even won it. Not to talk of the recap. But what is regional integration and trade blocks? Really, it's just speaking to common regional integration is when two or more countries, right, within the
Yeah.
same geographical location come
That's
together
not country. Yeah.
to to foster trade, right, or for economic advancement in their region. That's what regional integration is. While trade blocks is two people, countries, maybe of different geographical location now, just coming together, and the major reason for them coming together is to ensure that they come together for common goal, to achieve a common goal. That's what we call trade blocks. That's what regional integration and trade blocks is. So regional integration is they are within the same region. Think of ECOWAS. That's an example of regional integration. Think about your what's the name now? Think about your African Free Continental Trade Agreement. That's also
Exactly.
an example of what's the name? Your regional integration. But if you think
Mm.
about OPEC, OPEC is an example of your trade blocks because
Trade
it's
block.
only for oil producing countries, oil producing states. So typically, if the examiner is asking, I think it was tested. Let me use this past question to treat it. I think it was tested in 2020 and 2021 respectively. So let me just use that to test it once and for all, to just explain it. Ah, this compilation is this one. It was tested in 20, I believe it was tested in 2019. Hmm. Okay, this is it. So this one of it, you were asked, this is a typical way they set it. So this was in March, July 2020, question 5. I think 5, yeah. So distinction between regional integration and trade blocks, objectives of regional integration, common markets and economic union as major types of regional economic integration, benefits of regional economic integration and trade blocks, disadvantages of regional economic integration and trade blocks. So like I said, are you with me?
So I can't see your
Yes.
screen.
Can you see my screen?
I
Yes,
can't see
I
your screen.
can see.
Yes, we
You
can.
might have to refresh.
Yeah, okay. So if we can see it, I think we can move on. Right. So what is regional integration and trade blocks? What's the difference? Right. So the difference basically is one, regional integration is the coming together, like I explained before, the coming together of two countries, right? I mean, two or more countries, not necessarily two, is a sometimes bilateral, sometimes multilateral, but both of them are coming together with the aim of making of common goal of achieving a common goal, and the common goal will always run a range between, say, political reasons, economic reasons, right, and whatever reason they are coming together. But if they are within the same region, then you would say that that is regional integration. But trade block is when they are not within the same region, but they are coming together to achieve a common purpose, right? They are coming together to achieve one, say, one thing that is very, very important for them. Then you say that is what? That is trade block. So, what is the reason for regional integration? What are the reasons, right? For, or what are the objectives? The objective are the same as the reasons for regional integration anyway. Number one is just to foster political international diplomacy among member countries. Number two is to contribute to the peace and security of the member states in the region. Number three is to strengthen integration, trade integration within the region. So, for instance, you have the free trade, the free continental trade arrangement that is now in place. You seek to foster and bolster economic development. You have development of strong public sector institutions and good governance, and things like that. They're basically what's now. They're basically the objectives of what's the name now? Regional integration, right? Are you with me? So if you allow you with me, please.
Yes.
So now, what are the benefits of regional integration? Number one is it fosters trade among the member countries. Number two is that it's those organizations will also need people, will employ people to work for them. Then it enhances diplomacy, right? Then there is uh it's among member countries and so on and so forth. So those are the block. Then the next one is what are the disadvantages? Disadvantage number one is that there is trade diversion because, are you with me?
Yes. Yeah, but
So,
someone said you are too
for
fast, so
instance,
they can't
in
drop down. Hello, Mr. Michael. Mm.
earlier, I cannot hear you. You're calling my attention to something.
They said you were too fast. They said you are too fast.
Okay. Okay. So now, if I'm on disadvantages, right? So the disadvantages are one, there's trade diversion. Members are usually advised to trade within themselves. So what that typically would mean for non-member countries is that non-member countries will not get trading arrangements with member countries of that organization. Number two is that It also causes employment shift, right? Because the focus now is on member countries. So non-members may likely not get right employment opportunities. Then there's also loss of national sovereignty because at the end of the day, most of the time they grow up to become confederation, right? And then the confederation may simply means that most member countries will lose their sovereignty, right? Will lose their power. So the confederation they are trying to build, right? Also, it's a form of barriers to trade for non-member countries, and also there's investment diversion. There's always a sense of investing, right, in only member countries. So let's look at there are two examples of regional economic integration. You have your common market and you have your economic union. There are types of regional economic integration. Common markets, there are actually four, but I can't remember the remaining two of the top of my head now. All right. So let's look at what is common market, right? Common market allows for the creation of economic integrated markets among member country, right? That's what common market seeks to achieve. Is looking at bringing people together, just trying to create trying to reduce barrier to trade, trying to create a free market for all members, for all member country. We're trying to now reduce the barriers to trade, creating a free trade zone or a near free trade zone for all member countries. So an example is the COMESA, that's common market for Eastern and South African countries. Another one is your ECOWAS, right? Another one is your, what's this name now? Africa Continental Free Trade Agreement. The second one is the Economic Union. The Economic Union is when member countries come together just to adopt a particular policy, a common economic policy, with a bid to remove barriers to trade. So an example is your Brexit. Yeah, an example is your European Union. So they just come together, they develop policies, right? Example is your fixed exchange rate, trying to create a uniform currency between member states, transact uniform currency between member states and something like that. Just trying to come up with monetary and fiscal policies that will help that will aid the economic transaction among member countries. Does this make sense to you now? Do you get it to this extent? All right. So with that, but even this question entirely in its entirety discusses regional integration and trade block. I'm not sure there's another thing in regional integration that has not been mentioned here, apart from the two other types of regional economic integration. So you may want to find out what are the two other types. I know there's common markets, but it's free trade area. There are four that you want to check up just to make up for what you have here. Any question so far? Any question, please, on this one? Do you have any question in the chat room for this one?
Somebody asks, what do you mean by region? Is it countries or states?
Region is countries, not states. Do you understand?
Yeah, somebody said you should explain. Please explain the C again.
What's the C now? So common market, like I said, the common market, right?
I think that was in the chat. Yeah.
Yeah, so the common market, basically, like I said, is just trying to remove barriers to trade by creating an economically integrated market for member countries. Right? So they're just trying to create a free trade area or a near free trade area for member countries to become more integrated and reducing the barriers to trade among member countries. While your economic union is countries coming together, an integration with the aim of adopting a common and in a bid to remove barriers to trade. So what they do in what economic union typically would your uniform currency, uniform trading currency, and the likes. Do you get that? Does that clarify?
I think the person got it. Someone asks again. The person is taking us back. He said, is custom duty allowable in CIT?
What?
Is custom duty allowable in CIT?
What do you say?
Can you hear me?
I can hear you. Please go ahead.
Someone asks, is custom duty allowable in CIT?
Custom duty? No, no. It's not allowable under CIT. All right. I hope that clarifies, right? We're good.
Someone asks again, please explain
Okay, go ahead.
treaty shopping. I say you should explain. I'm reading it from the chat box actually.
Let me just treat one question on double taxation.
Those
Is
are
that
my
fine?
thoughts. Yes, I think we can go ahead. This regional integration, we can read it up in the question because I mean we still have to give more details.
Hello?
We can hear you.
Hello?
We can hear you.
Hello, I cannot hear you. Can you hear me?
We can hear you. We can hear you. We can.
Yes, we can hear you.
So, what you were trying to ask a question? I didn't hear what you were saying.
No, somebody wanted you to explain again, and you said you were going to move to the double taxation, which we have agreed that we should move to double taxation. But someone is now asking that what year was that question on regional?
March, July 2020.
Angela, that's for you.
All right. Thank you. So let us solve one question. And I believe you read transfer pricing on your own. Feel free to always ask your question on the group. I will be willing to answer your questions. So it's not necessary to meet again on Saturday. Use the time you have on Saturday to read, Abby.
Yes, that works.
That works, right?
Yes.
But what we typically have in the group service more or less like a class. Well, question, not teaching on its own. Just that I've been busy today. I've not been able to attend to any. In fact, I've not been on WhatsApp today. Should we check this out? So let's quickly work with this. November 2019, question 2. All right. Are you there?
Is this still double taxation? So it's Mowe and Nigeria. Mowe and Abuja.
Is Nigeria and Ghana now?
Okay. But the first question you shared, they specifically mentioned double taxation. Okay. This is a report.
This double taxation. Let's do this.
Okay. What year is this? November 2019? Is this November 2019? What year is this question?
I can't hear anybody if you can hear me.
Can you hear me?
They were asking what year is the question? What year
the question
is the
we're about
question?
to solve? What year?
Yeah, November 2019, question 2.
Okay, thank you. So should we go ahead now? Thank you. Okay, someone is asking if you could explain the types of double taxation and where there is no double taxation and where there is double taxation.
Yeah, this question we explain now. I will use this question to illustrate it.
Latifa, stay tuned. So let's go to the requirements, or should we start from additional information? Yeah. Gift, do you want to read?
Go ahead, Victoria. Thank you.
Okay. Provide professional advice on the status and tax implications of the company's operation in Ghana. B. Draft a report showing the tax liability of the company for the relevant assessment year, bearing in mind the reliefs available to the company under the Companies Income Tax Act (CAP) as amended. You can scroll up, please, or scroll down. Olab Nigeria Limited is a manufacturer of pesticides and is based in Mowe, Ogun State. The company has been operating in Nigeria since 2001. One of the major highlights of the Summit of Heads of Government of the regional body Economic Community of West African States, ECOWAS, held in Abuja, Nigeria, in 2014 was the encouragement of trade among member states. With the expected introduction of a single currency, ECO, for the sub-region in 2020, it is hoped that the problem of currency exchange risk will be reduced considerably. It was as a result of the future prospects in the West African market and general acceptability of the company's product through numerous sales representatives from Ghana.
Honestly, this network is bad tonight.
Can you hear me? Can you hear me?
Can you hear me?
Yes, I can. And I believe everybody can hear you.
Oh.
So we can hear you, yeah. But can you hear me?
I can hear you, but I'm not sure he can because he's not responding.
Yeah, his network is terribly bad, and he's even scrolling further. That means he cannot hear us. Oh Jesus!
Hello, can you hear me?
We can hear you.
Okay, so what do you want me to do now?
We've not gotten here, but if you can just, yes. So it was as a result of the future prospects in the West African market and general acceptability of the company's products through numerous sales representatives from Ghana that made the management of Olabje Nigeria Limited to extend its operations to a Commonwealth country, Ghana, on 1st January 2015. The business is located in Takoradi, Ghana. The result of the business operations in Nigeria and Ghana for the year ended December 31st, 2018 are as follows. Nigeria, Ghana total. You can scroll now. Additional information. For the Nigerian operation, bad debts include 900,000 general provision. 2. Legal expenses consist of tax dispute, defense of title to land, debt recovery, others allowable. The foreign exchange loss provision arose as a result of fluctuations in cash balance through conversion from Ghanaian cedis to Nigerian naira by a commercial bank in Ghana. Capital allowances for the year, as agreed with the Federal Inland Revenue Service, are as follows. Nigeria, 1.6, Ghana, 520. The chairman of the company was not happy with the assessment by the officials from the Federal Inland Revenue Service on the Ghanaian operation. He based his opinion on the fact that the Ghanaian operation is offshore and relevant taxes had been paid in Ghana. The FIRS officials disagreed with the chairman and asked the company to file for double taxation relief since Nigeria has a double taxation agreement with Ghana. At an emergency meeting of the company's board held on June 12, 2019, it was decided that a professional accounting firm should be engaged to resolve this contentious issue. You have been appointed as the tax consultant to the company. Done.
Is it my network?
I'm done. I'm done if you can hear me.
I can hear you. I think he's not. His network again.
Iron breaker.
Can you see my screen?
Yes, we can.
Are you done reading?
Yes, I am.
Okay, no problem. So anything we don't get, we get later.
They're not today.
So let's quickly deal with Olabje, Abi.
Yes, Olabje Limited.
Olabje Nigeria Limited. Right. So what we want to do here is computation of what they asked you to do. You were asked to provide on the applications. So tax liability. Computation of tax liabilities. Don't forget it's preceding year basis. So you see for what year of assessment? For 2019 year of assessment, Abi? Am I alone?
We are with you. You are not alone.
No, you're not. No, you're not alone.
So you would have this guy. Uh, we have Nigeria. You have Ghana. But let me do a table to be safe. So let me say Nigeria. Ghana. All right. So are you with me? So you
Yeah,
have
we
net profit.
100%.
How much is the net profit here for Nigeria? Is our figures in thousand? Yeah, I think we can do that. We have 6,275, Abby. 725. See, let me just explain it this way. Double taxation is not different from your normal CIT for allowable and disallowable provision, right? It's not different. Look at it that way. The only difference is just the relief. So it means that even for you to understand this thing very well, you have to still understand how to compute tax liabilities. So what is the relief talking about? The relief is saying that if you are dealing with a commonwealth rate, that's where a country that Nigeria has a double taxation arrangement with, you are supposed to select the higher of, right, the half Nigerian, no, sorry, the lower of half Nigerian rate, right, and the commonwealth rate. Does it make sense to you? You are supposed to select the higher of, sorry, how am I saying the higher of, where Nigeria has a double tax treaty with another country. The relief shall be the lower of half Nigerian rate or commonwealth rate. Are you with me?
We are with you.
Or the commonwealth rate. So you are picking the lower. So in this case now, Nigeria has a double tax arrangement with Ghana, right? So it means that for this guy, on no occasion will their rate be higher than half of Nigerian rate. So their rate should normally not exceed, right, half of Nigerian rate. But like I said, this one is, although is the differentiating factor in the topic, but it's very, very secondary. Still on the fact that you can compute your tax liability, that you can solve this question. If you cannot compute tax liability, I'm sure you cannot solve this question accurately. So let's go back to what we are doing. So let's deal with the major thing, which is to compute the tax liability, right? And in computing tax liability, your provisions for allowable expenses and disallowable expenses will still be what you are going to follow at the end of the day. So add disallowable, are you with me? Expenses.
Yes,
What
we
is
are.
disallowable? What is the
100%.
disallowable expenses? Right. So we have your salaries allowed. Bad debt, we need some additional information to know what is the content, right? Then we have, are you with me?
Yes, we are.
We
Yes.
have entertainment. Entertainment is allowed. We still need to check the content. Legal expenses. Legal expenses is allowed. We need to check the content. Traveling expenses is allowed. So
We can no longer hear you.
can you hear me now?
Yes, travel expenses
Well,
is allowed.
I said travel expenses allowed, but we need to check the content. Repairs and renewals is allowed, but we need to check the content. Bank charges is allowed, right? Audit fees is allowed, but depreciation is disallowed, right? Can you hear me?
Yes, 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 yes,
I said
yes.
depreciation is disallowed. So how much is depreciation? 1820 and
1820720 for Ghana.
so the total 1820 plus 720.
2540.
So what?
540.
Like this, right? So foreign exchange loss, it is unrealized, right? Because the examiner did not tell us it's realized. So it's unrealized, right? So you see foreign, are you with me?
Yes.
100% it is.
How much is that? 1410, Abi? 1410. The miscellaneous expenses, the examiner has to explain to us what is the idea there. But then your foreign tax so far is also disallowed. And that's one thing you must note. You are going to use this information, this foreign tax so far, they are using this information twice, right? The first is that you have to add it back as a disallowable expenses. The second is that you use that to form the basis for determining your Commonwealth rate. Do you get?
No,
Do you
can you come
understand?
over that? Your network went off. To
So I was
determine
saying
what?
that your foreign tax offer is used twice. The first is that you have to add it back to as the salary expenses, and the second is that it also forms the basis for determining your Commonwealth rate. Right. So this is the first leg I'm using. So I'll still use it. I'll use the second leg in the next couple of minutes. Is it clear, please?
Yes.
Yes.
All
Thank you.
right. So then you have legal expenses consist of legal expenses consist of your tax disputes. How much is your tax disputes? 400 is disallowed. Right. Then you have defense of title land. It is capital in nature. Right. 320. The next one is all right. So capital allowance is agreed. I think we're done with all the information, right? So please help me now with the adjusted profits. Don't forget you add back. Oh. Please help me.
For first off, the bad debt has an additional information.
So where's the did I miss that? Okay.
Yes.
General provision, okay. General provision. Bad debt. That's the Nigerian operations,
Now,
right?
yes.
All right. So how much is that?
Nigeria has 10,165.
Eh? Is that what you said?
Yes, but let me just confirm again.
Yes. It is. It is. 10165. That's correct.
Next one.
Uh, 9,460.
Total.
$19,625.
19,625. Right. Then less capital allowance. So what is the capital allowance agreed? Ghana, you have 1,600, Abi.
Yes.
And then you have, sorry, Nigeria 1,600, Ghana 520, Abi. So what do you have as the total?
Yes.
1,006. That's 2120, Abi. Please confirm.
Yeah.
So total profit. What do you have?
7,165. Under Nigeria, 8,565. Are you there? Okay. 8,940.
So what do you have?
17,505.
Like this, Abi.
Yes, please.
So the next thing you want to do, right, your step 2 here is to determination of tax suffered. That's the Commonwealth rate. Determination of Commonwealth. Okay, that's the next thing you want to achieve, right? And to determine the Commonwealth rate, it is the foreign tax suffered. Are you with me? Are you with me, please?
Yes, we do. Yes,
Divided by
100%.
the total profit, right? Then multiply by 100. So if you bring that into context, how much is the foreign tax suffered for this guy? Is 1,830, right? Divided by what's the total profit? The total profit is 8,940, Abi. Multiplied by 100. So what's the Commonwealth rate? What's the Commonwealth rate?
20%.
20%, Abi. I should leave it as 20%, Abi.
Yeah.
Yeah, or 20.5. Yeah,
20.
that was okay.
20.5, okay. So we are saying this 20.5% is what you are comparing with the Nigerian rate, right? And we are saying that the rate is the lower of, right? So double taxation relief. Are you with me?
Yes.
Is the lower of half of Nigerian rate. What's the half of Nigerian rate? That's 15%, Abi. And
Yes.
the Commonwealth
Yes.
rate. So the Commonwealth rate here is what? 20.5.
20.5%.
So what's the relief
20.5.
here? The relief here is going to be 15%, basically. Does it make sense?
Yes, it does.
So if the relief here is 15%, so you say therefore double taxation relief will be equal to 15% times the total profit of the foreign company. The foreign company. So what do you have?
1341.
So you have 1,341. So you did 15% of 8,940. Is that what you did?
Yes.
All right. So now you want to now do is determination of tax liability, Abi?
Yes.
Are you me?
Yes.
100% for you.
Total profit. How much is total profit? Sorry, don't let me bother myself with that. Let me just do CIT at 30%. What do you have? So you are using the total profit here.
No, it's 5251.5.
5251.5 like this.
51.5. Yes.
Okay. So that is what you're doing there. Then less your DTR. How much is your DTR? 1341.
1341.
No point in front, Abby.
No.
Okay.
No.
So what
That's
do you have?
3911.
39. 39. 3904.5 like this.
No. I got 3910.5 approximately.
3910.5 like this, Abby.
Yes.
Like this.
Yes.
So TET at 2% of accessible profit, which is going to be adjusted profit, right? So you're doing TET of 19,625. What do you have?
392.5.
92. So much is your tax liability?
4303. This is
Is there
November 2019 question, I think. Yeah.
4303? Is there any point?
No,
And
it's
if we're able
5.
to do
No,
this,
no point.
we're able
5
to do this one.
pages.
We're able to
Someone
do this.
says there's a mix up in the formula. What formula, Abigail?
Yeah. Is she able to clarify?
Blessing says our CIT is based. Are you trying to explain? Blessing. Abigail, I can't find your question. Gibbs, can you find Abigail's question?
No, I'm looking at it. I can't find anything up. Trying to scroll up. The new question from Abigail is Abigail, do you want to retype?
You said there's a mix up in the formula. That's the only message I can find from her.
And it said check my message up. So does it want to repeat the message again if he has anything? Abigail, if you can hear us, can you
Blessing, what are you trying to say?
can you drop the
Our
question again?
CIT is based on our total revenue, and our revenue is due company, which is 20%. Blessing, are you trying to explain or ask questions? Blessing, you can also retype for clarity.
Okay, Abigail says the formula is for where there is no treatment.
What formula? That's the Commonwealth.
You say where there's no treaty, Abby?
She said
I
treatment, or
think
maybe
that's
she
what I want
means
to use.
treaty. Yes.
Where there's no able tax treaty.
Okay.
Yeah. Yes, she
Oh
said
yeah, that's
yes.
what I'm trying to say. Yeah.
No, this is where there is double tax treaty. Either ways, you are saying that the taxes must not exceed 15% anyway.
Blessing, could you retype your question, please? It's not clear at all. Then someone has a question. When are we to calculate police development levy?
This is actually what is obtainable in practice. So I don't see any reason why examiner will want you to do police development levy. Police development levy is in practice, not something the examiner would be likely. I mean, it's not likely to be tested in any exam. That's what I'm saying.
Okay. Okay. Is CIT on the total profit of both countries or just
Yeah,
Nigeria?
that's the idea, right? The idea is that the both countries will pay tax. Both Nigerian operation and foreign operations will pay tax. But on the tax remitted by the foreign operations, we are trying to reduce it by the double taxation arrangement. Does it make sense? So
Yes, I
invariably, both of them will pay tax. Both Nigeria, I mean, the company will pay tax on both Nigeria operations and the foreign operations. But now the tax paid by the foreign operation will be reduced by the double taxation relief, right?
okay.
Because obviously, the company will have personal representative abroad, right? And the company is also obliged or will be expected to pay tax based on where the income is generated from. So just a way of relieving that kind of excessive tax is what double taxation relief is trying to reduce, so to say. Do you understand it now?
Yes, I believe they understand. So Blessing is trying to clarify that our CIT is based on our total revenue, and our revenue is a medium company, which is 20%. Can you
So
check?
at this time, it was 2018, right? So at
Okay.
that time, there was no classification of company. So if it's something that is now recent now, then I will consider the classification of companies.
Okay.
I'm asking based on the year of assessment. So you are correct that, I mean, the company is a
Revenue.
medium-sized company by revenue size. In fact, the company is a small company by revenue size, I believe. Was okay, it's a small 52 million. It's a small company, right? It's a medium-sized company, beg your pardon. So the tax is supposed to be 20%. So, but that's beginning from 2020 year of assessment. As at 2018 or 2019 year of assessment, there was nothing like
Classification.
categorization of companies.
Okay. In a case where there is no treaty between both countries, how is the DTR going to be treated?
So, in the case where there's no treaty, it is going to be the lower of half of the Commonwealth rate, right? That's the lower of the half of the foreign tax offered and half of Nigerian rates. Do you get that?
Please,
Want you
would
to
you
throw
take
more
that
light on
again?
that, please?
So what I'm saying is this: it's going to be half of the foreign tax offered or half of the Nigerian rate.
Okay, please, can you write it down in the solution or
Okay.
of the solution? So that, thank you.
Okay. Same treatment, but the only thing here is just so you have half of Commonwealth rate, half of foreign rate. Let me just use the foreign rate. Or
Also, will the question specify if there's a treaty or not between
yeah,
the countries?
the question should specify if there's treaty or not, but where it doesn't specify, just assume that there's treaty. So in that case, the lower of the Commonwealth rate and half of the Nigerian rate.
Okay, thank you. Benjamin, I hope you're clear.
All right, another one.
That's all in the chat box, but some people's hands are raised. So I think you might want to check.
What's that question?
I think Abigail asked one. Abigail asked one. You didn't read that. Where there is double taxation agreement, is the lower of the Nigeria tax on the foreign income and the foreign tax paid on the foreign income?
Where is what?
Where there is double taxation agreement is the lower of the Nigeria tax on the foreign income and the foreign tax paid on the foreign income. Don't know if you get that clear, but that's what she
Okay,
wrote here.
I didn't get it.
Maybe she should use her mic.
Maybe I did. Yeah.
So let me get you, Abigail. All right. So Abigail, yeah.
All right, thank you very much. I'm still on the formula for where is double taxation agreement. I'm saying that the formula is a mix-up. The one that I know is lower of Nigeria tax rates on foreign income, or the foreign tax paid on the foreign income. The foreign tax the guy paid with the Nigeria tax rates on foreign income. The lower of the two is what we should choose when there is double taxation agreement. But when there is no double taxation agreement, then we use the first formula you gave to us, the lower between the half of Nigeria and the computation of the Commonwealth rates.
Okay, I will confirm and revert.
Thank you.
That's fine. Thank you. I will confirm and revert. So I'll just check and get back to you again.
Okay, Folashade is also saying where there is an agreement, the rate stated in the agreement will be used. Where there is no agreement, it is the lower of half of Nigerian rate and Commonwealth rates.
Okay, no problem again. Whatever you say is, I will just confirm and then I will send the link to you, the link to the law, and then just share with you as soon as I find it. So I'll just share with you on the group. I think that works, Abby.
Yeah, it does work. Pertaining to this agreement.
Yeah. Because now we have 3 opinions, right? So no problem. Okay. I think we're good to go for tonight, right?
I think we have touched on all the questions the topics that we planned to.
Yeah.
Hi, good evening. So I have a quick question.
Yes.
The second rule, does it applicable to both resident and non-resident company?
The NR the non-resident and non-resident.
Yeah, when there's no double tax rate, does it applicable
Yes,
for
it applies to
for
both resident and non-resident companies.
so half of foreign rate or half of Nigeria rate?
Again, non-resident companies are not expected to do double tax because they are paying tax on as personal representatives. So they're only paying tax on the income generated from Nigeria. Or am I missing something from your question?
No, just want to confirm if this where there's no double tax rate, if it's applicable for non-resident company also.
I can't hear you again if you can hear me.
I said it. I just want to confirm where there's no double tax treaty. Is it applicable? This formula is it also applicable for resident company also?
Yes, what we're looking at is resident companies, right? But for non-resident companies, non-resident companies are only expected to pay tax on income that are generated from Nigeria, as the personal representative is generating from Nigeria. Do you understand?
Yeah, thank you.
Yeah, you're welcome. So I think we're good to go for tonight. Have I attended to all your all right?
Sir,
So Aisha Maluku.
all right, sir. So I want to get something clear.
The double taxation is it that it is double taxation relief. It is granted for companies that like Nigeria companies in which maybe they have subsidiary or another company in another
Exactly.
region. So we are
Exactly.
being like we are giving them relief on that profit end from that particular country,
No,
right?
it's not on the profit end, though. Well, I don't know what you mean by the profit end, basically. But what
I'm
double
like
tax
I mean the income.
as a Nigerian company, right? You are expected to
Yes.
pay tax on all sources into Nigeria, both Nigerian companies and your subsidiaries,
Okay.
right? So in that case, what you do is that to reduce the burden on the foreign company, right? Then they now consider, okay, let's relieve it, a way of reducing the burden. That's what relief is trying to discuss here. Because the tax will be paid on all, both Nigerian operations and foreign operations.
Okay. Okay, so sir, what explanation will you give to a branch company, a subsidiary, and any turnkey project?
I didn't get you.
I say, what explanation are you going to give to branch, like a branch of a company, subsidiary, and turnkey project?
So a turnkey project is a one-off project, right?
Yes.
So for this case, in the case of your branch, the income generated by the branch is still going to be assessed to tax, basically. Or I'm not getting your
Okay.
question. I'm not getting your question.
Like my question is that a branch, like it's not a resident company, it's a non-resident company, but it has a branch here in Nigeria.
Okay, a non-resident company has a branch in Nigeria.
Yes.
So in that case, it's not double taxation treaty. The company will just be assessed to tax based on income generated from Nigeria in Nigeria.
Okay.
Do you understand?
Yes, sir.
So it is when
Okay.
the company is a resident company, meaning incorporated in Nigeria, that's when double taxation becomes a thing, right? But in case where the company is not resident in Nigeria, then the company shall be assessed to tax based on the income generated from Nigeria. Does it
Okay.
make sense?
Yes, sir, it does.
So,
Okay, so I
so,
think
so,
the last one is that okay. Continue, please.
so the same is applicable for both turnkey projects. For your turnkey project is a one-off project from the beginning, from the design stage to the end stage, right? But it's typically a one-off project. And the same thing is applicable for subsidiaries, basically.
Okay, because there was this question I saw on Turkey project. So the question, the profits, like the Nigeria company, it's a branch of the foreign country. So the foreign company supplied the contract to the Nigeria company. So the profits it was earned in Nigeria, but there was no double taxation relief granted to that income. So I don't understand that part. I don't know why.
Yes, there's not going to be double taxation because the company is a non-resident company, from what you are saying.
It's not a resident company, but it has a subsidiary here in Nigeria, and the income is earned here in Nigeria.
That's what I'm saying. In that case, you are not expected to get a relief because you are assessed to tax based on income generated from Nigeria.
Okay.
If I may add, you will see that the subsidiary or the branch must be registered in Nigeria to operate in Nigeria. So it
So
is charged
in
in
that way,
Nigeria
the
based on its registration.
personal representative.
Okay.
Do you understand?
Yes, sir. Very well, sir.
Yeah,
Thank you.
you're
Thank you.
welcome. So,
Someone
okay,
is still here.
see me, okay.
Okay. Sir, I just wanted to confirm for hydrocarbon tax calculation for G factor,
It's
API, and all that.
not necessary, not necessary, I beg, not necessary.
No,
It's only
API especially.
not necessary.
Okay.
All
Okay.
right.
Thank you.
Yeah, blessing. Okay. Blessing is not online.
No, I'm online, please. I'm online.
Okay.
Good evening, sir.
Good evening, ma'am.
Please, sir, I need a clarification as regards that capital allowance under special company because I was
Okay.
trying to calculate it and I wasn't getting it. Please, the formula you said it's depreciation ratio. That's the one we computed. Multiplied by what, please? Because I was using Nigeria
Multiply.
income and it wasn't giving me.
Yes. So I said that in the case where they have agreement, in the case where they have agreement, right? So the agreement supersedes. And I believe if you check that question, you see that they had an agreement. So the
Yes.
agreement overrides the formula, the initial formula given. So the agreement
Okay.
is what now determine what will be your tax liability.
So my
Your
capital
capital
allowance
allowance,
will
I
now
mean
be
to say.
with the 110% multiplied by
The depreciation
that
given in the question.
the depreciation given in the question. Thank you.
Yes, because
Then
that's what the
two.
examiner wanted.
Okay. Under this double taxation, you were talking about entertainment being an allowable expenses. Please, can you throw more light on it? Thank you.
I didn't get you.
Entertainment under double taxation, you said is allowable expense.
Yes, of course. Generally,
Uh,
entertainment
okay.
is allowed, except if there's any reason to say otherwise. But entertainment on the face of the question is an allowable expenses.
Thank you,
But
sir.
then if the examiner now tells us that okay, oh, they're entertaining staff, then it becomes disallowed. Right? So but then entertainment on the face of it is still allowable. It's reasonable now. I work without play make Jack a dull boy.
Thank you, sir.
All right. So we're good.
But entertainment to customers is allowed, right?
Yeah, entertainment to allow customer is allowed. Usually when you are doing it to induce them. So sales, promotion and the likes.
Okay, thank you.
You're welcome. In the case where it does not specify the difference, right? But the examiner should not be a woman that will be leaving you to your judgment, right? But in case it's specified, so just assume that it's a general provision and disallow it.
Sorry, please. I didn't get what you said now.
So the person was asking about general and specific provision for bad debt. So I was saying that in that case, if it's just like on the face of it, allowance for doubtful debt, then you will assume that that is a general provision, and so you disallow it. All right. Thank you very much for coming. I appreciate you.
Hello, sir. Please, can I ask this question, please? Sorry,
Yeah.
please.
No,
It's
well,
about
when I
the
was,
question we solve on capital gain tax, please. That
yes.
reinvestment. I didn't
Mm-hmm.
really, did not get that aspect of I don't know where the amount is reinvested, picking the lower of between sale proceeds, and I didn't really get that at all. I don't know if you could maybe kind of
So
explain that part, please.
the issue there is I want to believe that what you are speaking to is the idea of when you sell in between connected persons, right? When you sell between connected persons, then you select the market value. That's
No,
the
no,
area
not that
of the
one. Not that one,
and
sir.
which one?
No, not that one. I
Okay.
don't know if you could go to the worksheet. The one that we
Okay.
did, is it 50,000 minus 30,000, something like that?
Where's that? Please check out unit trust scheme. It's important you check it out too. unit trust scheme is important too, but it's a very short one
Please,
anyway.
can you just write it here so in case we forget? Can you write it on this show?
Okay, no
Just in
problem. Right?
case. Thank you.
But you not forget in Jesus' name. This is my
Amen.
worksheet to Benjamin.
Okay, exactly this point.
Okay.
Yeah, starting from this less rollover relief.
Okay, rollover relief. So we said is the lower of the sales proceeds
Hello, I think I didn't get that. Your voice ceased.
with an amount reinvested. So the
Hello.
difference. Hello, can you hear me?
Okay, I can hear you now.
So
I've
we
not been
said is
hearing you.
the difference, right? We are talking about the rollover relief.
Yes, sir.
So is the lower of the sales proceeds and the amount, right? Is the lower of the sales proceeds and the amount reinvested. Does it make sense?
Yes, sir.
All right.
Are you still there? Okay.
Hello.
Mhm.
Hello, Mr. Michael. Hello. Hello.
Hello, can you hear me?
Can you hear me? Hello.
Hello, I can hear you.
Yes, a quick one. Under this capital gain, we didn't touch option and shares. Hope we are good.
Yes, you are good. You are good. It's not something of a big deal.
Is there any way to talk little about it? At least, because they have tested it before.
Yeah, they tested it in 2023. So what options is basically talking about, especially debt. So what is the new capital gain tax is saying is that when debt is transferred, basically, right? Okay, let's start from the recent development on capital gain tax. So now I think capital gain tax is trying to incorporate loss of office that is above 10 million naira. So the first thing is any loss of office that is above 10 million naira is now liable to capital, where your terminal benefit is above 10 million naira. I mean, so you now pay capital gain tax on that amount. Does it make sense? That's the first thing. That's You are paying capital gain tax on the, what's the name now? On the terminal benefit. I want clear first. So the second one, can you hear me?
Yes, that part is clear. I'm just looking at the possibility of option and shares.
So in the case option and shares,
Hello?
hello, can you hear me?
I can hear you.
So in the case of options, right? Or options is typically a right to buy back, right? Is that what you're talking about? Is when you sell with a buyback clause, with a right to buy back, right?
Okay. I'm listening.
So in that case, what's the law is saying is that once you sell with a clause, a buyback clause, really, so the transaction is just going to be assumed to be sold, right? So in that case, you will pay your capital gains on the option contract. Does it
Okay.
make sense to you? So what I'm saying in essence is this: if we have a capital gain tax, I mean, if we have a transaction that, okay, I'm selling to you, but ideally, when I sell to you with the option that you are supposed, or you have the right to buy back the asset, if you want to consider it, the asset is not yet transferred until the whole thing is fulfilled. But what the law is saying is that once I sell to you with that clause, I should compute capital gain tax on the sale. Immediately the option is carried out. Do you understand it? Hello?
We can hear you.
Yeah. So that's what the idea of options is saying.
Okay, thank you.
You're welcome.
Then lastly, have we talk on merger acquisition?
No, we've not talked about merger and acquisition, but merger and acquisition here, the idea of merger and acquisition is this. If a company, in the case of merger, right? If a company is, are you with me?
Very much, very much.
So
I'm with you.
in the case of merger, what is happening is that two businesses are coming together.
Okay.
So in that case, cessation will apply to the ceasing business, but commencement rule will not apply if one of the companies is still maintaining the name. So you have the case, for instance, you have in the case like of Access and Diamond Bank. So cessation rule applied to Diamond, but commencement rule will not apply to Access Bank. Does it make sense? But in the case where it is total takeover, right? So cessation rule applies to the companies that is ceasing, and then commencement rule will now apply to the new business. Does it make sense? So that's one thing. Number two is that on their purchase, on the merger and acquisition, there is going to be value added tax on the M&A due transaction, basically. So anything that has to do with reconstruction of the business and is value added taxable, the value added tax is going to apply, basically, and stamp duty is going to also apply on the reconstruction arrangements. That's just the summary of what merger and acquisition is talking about. But I will share the notes with you on merger and acquisition.
Okay, it's more of a theory.
It's theory, obviously. It's theory.
And that of this transfer pricing too.
Transfer
You are
pricing
not.
is transfer pricing is theory 100%.
Okay, okay. It's all right. Just share, please. Kindly share the note so that.
Yeah, I will share the notes. I'm coming. I'm just looking for. Sorry, I'm looking for this option thing. I'm looking for one question that I can use to explain this option thing very well, so that maybe I should just solve one. It was tested in May 2022. Question 3. Okay. Do you mind me solving it?
Please go ahead.
All right. Hello.
Hello, you went mute for a while.
Oh, sorry. How about now? Can you hear me? Which one is it?
Yes, we
Okay.
can hear you now.
Yes,
Yes,
we
we
can
can
hear
hear
you.
you.
Okay. Okay. So I was trying to solve these options arrangement, right? Well, let me just yeah, these options and debt arrangements. So let's go.
Sorry, which year?
I want to go to require.
Yes, May 2022 question 2.
Required, you have been directed by your firm's head, tax matters, to take charge of the assignment and submit a report to him by the close of work in 3 days. Your report should specifically cover the principles of disposal as provided for in Section 6 of Capital Gain Tax Act 2004 as amended, computation of capital gain tax payable and when the tax due is to be paid to the relevant tax authority for the following stated transactions. 1. Disposal of an option in Ikeja branch, acquisition of asset in exchange for debt in Calabar head office. 3. Disposal of a building in Abuja branch. 4. Disposal of industrial plant in Kano State.
All right.
Disposal of asset is an important concept in the determination of capital gain tax payable. Section 6 of Capital Gain Tax Act 2004 as amended specifically provide that the disposal of asset by a person occurs where any capital sum is derived from a sales, lease, transfer, an assignment, a compulsory acquisition, or any other disposition of assets, notwithstanding that no asset is acquired by the person paying the capital sum. In the same vein, Section 2, Sub 4 of Finance Act 2020 states the period for filing of self-assessment return and when payment of the tax computed in respect of chargeable asset disposed is to be made. Nice One Nigeria Limited, a manufacturing concern with head office in Calabar and branches in Ikeja, Kano, and Abuja, has been in business for several years, reporting its accounts to December 31st of every year. The extract from the books of account of the company during the year ended December 31st, 2021 reveal the following transactions. 1. Disposal of an option. On February 1st, 2021, the company sold an option on a piece of land in Ikeja for the sum of 8.5 million to Echo Prime Limited, which subsequently exercised the right by purchasing the land for 32.2 million. 2.
Okay,
Acquisition of assets in exchange for
let me
debt.
just hold on. Let me quickly solve that now. Hold on. Let me just solve. Let's do it this way. So, because each of them are independent of each other. So let me just, as you say the first one, I will just do the first one. So what option is basically, if you look at it from your context, option is saying that I'm selling an asset to you with an option that's with a right that you buy with a buyback clause. Let me use the word buyback clause. So there's a buyback clause on what I'm selling to you, right? If you like, you can exercise the option. If you like, you may not exercise the option. But what's ideally before the Finance Act 2020, I believe, before Finance Act 2020, yeah, what used to happen is that it is until the option is now exercised, because even that's what IFRS 16 is saying, 15 is saying, that if there is a clause, you don't recognize revenue until the clause is being either exercised or terminated, right? But this guy is saying that it's not safe for them because they are not going to get enough money. So what this option is saying that once you sell with an option, on the option you are selling before it is even exercised, capital gain tax was that option, right? So now the amount in the option is sold So on February 1, 2021, the company sold an option on a piece of land. An option on a piece of land meaning that buyback clause, right? That's a right. So the sum of 8.5. So the sales proceeds is how much? How much is the sales proceeds that way? Am I alone?
8.5.
No,
So
you're not
8.5
alone.
becomes the sales
8.5.
proceeds, right?
Yeah.
So in that way, the sales proceeds automatically becomes the capital gain. Do you understand? The sales proceeds automatically becomes the capital gain because there's no cost of acquisition in this context, right? So you disregard the 32.2 million because that's the buyback clause. The 2.2 million will still attract its own capital gain at the end of the day, but that's after it has been exercised. But we are looking at it from the option point of view this time around. So 8.5 million automatically becomes the capital gain because it does not have a corresponding cost of acquisition. So it means if your sales process is 8.5 and that automatically becomes the capital gain, your 6GT will now be what? 850,000. That's the answer to the first one. That's what option is typically talking about. Is Tunde on this call? No. Okay. So that is what the option is talking about, really. Is it clear?
Yes, it's clear.
All right.
So I think there
Again,
is a corresponding cost. We just do it like normal
yes,
capital
like
gain
normal
tax
capital gain
process.
tax. Yes, exactly. So the same thing works for debt.
Okay, sir.
All right. They say so now.
Okay.
What debt? Are you with me?
100%.
Yeah. So let's go to acquisition of
Hello?
assets. Yeah.
Sorry, I didn't get this thing very well. This thing threw me out. I just.
Join again.
Hmm.
I've even asked that. I've asked after you.
Sorry, please. It's
No
network.
problem. No problem. Yeah. So what I was saying here is this. So your option here is with a buyback clause, right? That it should be exercised. It can option gives you a right, but not an obligation to buy back, right? So the sales process in this context, if there's no corresponding cost attached to this sales process of 8.5, which is option exercise of 8.5, well, sorry, with this option price of 8.5, then the option will attract its own capital gain tax. So that means your 8.5 is going to attract a 10% capital gain tax. Do you understand the idea now?
Yes, I do.
So at the point at which the option is now exercised, right? So this 32.2 million net of 8.5 will attract its own capital gain tax. If this guy decides to dispose of the asset at the end of the day, right? But we are just looking at the option point of view. If there were corresponding cost of acquisition attached to 8.5, you do net of it. But if there is none, so the option price automatically becomes the sales proceeds. That's what the Finance Act is actually talking about. Do you understand?
Okay, I do. Thank you.
Yeah. You're welcome. All right. So let's go to the debt part of it. Are you with me?
Yes.
Sorry, sir. What if there are other incidental expenses?
So you net it off. So you
Sir?
net it off. You net it off.
Okay.
If there are allowable incidental expenses, you net it off.
Okay. So you minus
So
it from the 8,500,000, right?
Exactly. So before you get your capital gain.
Your capital gain.
Yes.
Oh, okay. Thank you.
Excuse me, sir.
Yeah. Yes.
Sorry, please. For terminal benefits, is it the amount that exceed the 10 million that we're
Yes, the
charging?
excess of 10 million. The excess of 10 million.
So, for instance, if it's 15 million, we're only charging 5
5
million.
million. Yeah. Yeah.
Right.
It's anything. Yeah. It's the excess of 10 million. All right. So let's go to the debt part of it. The debt part of it. Yeah. On 15 November, one of the company's debtor in Calabar reached an agreement with the company by exchanging his piece of land, which is valued at 15 million, for a debt which is 13.5. Right. The company disposed land for 18 million. Incidental expenses incurred towards disposal of the land is so obviously, yeah, there was an exchange. Are you with me? So what happened? Let me explain this transaction here. The transaction here is that there's a house that is worth 15 million, but possibly the guy was owing somebody 13.5 and then gave 15 million in exchange for 13.5, possibly because of negative home support. Right? Are you with me? Am I alone?
100%.
No,
You're
no,
not
no.
alone.
We are with
So
you.
automatically, the value of the land is no longer 15 million. The value of the land becomes the value of the debt, or the value of the property becomes the value of the debt. Do you understand? Is what I'm saying making sense to you? So
No,
what I'm
Yes,
saying,
that means
can you
that
convert
it's no
that
longer
again?
15 million, is 13.5 million that will be the debt.
exactly. So what I'm saying in essence is this: say I'm owing you 10 million naira, and I have GLE, right? If I give you GLE in exchange for 10 million naira, it means the value of the value of the GLE is no longer 50 million, it's now 10 million naira. Do you understand? So it means that for this guy now, you have the sales proceeds is 18 million upon disposal, right? But then the cost of acquisition, if there were to be no debt exchange, right? The value of the land, the cost of acquisition would have been 15 million, but because there was debt exchange, the value of the debt automatically becomes the cost of acquisition of the property, right? So you have 13.5 million, right? And then you have incidental expenses. How much is the incidental expenses? You have 250, Abby.
Yeah.
250.
Yes, yes, 250.
So what do you have there?
250 incidental expenses.
Yeah, so you have 13,750, I think,
Yeah.
right? So do you have
Or 250.
capital gain?
Please, can you explain this option again?
More.
Sorry. There's no concentration. Proceed. Okay.
Okay, then. Just a minute. Let me just finish with the whole thing. So I'll just explain. I'll just do a recap of the whole process. All right. Do you get it to this extent?
Yes.
All
Gypsum.
right.
Gypsum.
Now, I think you should be able to do the other ones now. There's nothing new here. The second, okay, I think there's something that looks, okay. Let me ask you something here. Is this partial disposal or not? Gift, you
It's
want
not
to remove
partial
that?
disposal. It's not partial disposal.
It's not partial disposal. Why do you say that?
Because the value of the property that was sold, the value of that particular building was given.
Correct. Correct. So it's not partial disposal. Hope it's clear.
Please, sir, can you come in, sir?
Eh?
Sir, can you explain that?
So now, if you had read it on a surface, right, you would have this partial disposal because sold one of its building for 140, right? So you would have over assumed that, and they even gave you the cost of acquisition of the 5 buildings, right? So you would have over, that is partial disposal. You would have done A over A plus B times C. But then the examiner cost of acquisition of the building sold was 75,000. So this statement negates partial disposal. So in this case, it is no longer partial disposal. I think that's what the examiner is testing there anyway. That in this case, because of this statement, it is no longer partial disposal because we're given the cost of the assets sold. You know, the reason why we classify it as partial disposal is if we are not able to determine the cost of the assets sold, they will now do the formula to determine what is the cost or what is likely going to be the cost of the assets sold, basically. But in this case, you were given the cost of the assets sold. So in this case now, if you want to do disposal of building, you have the sales process. What's the amount the asset is sold?
110 million.
It was sold for 110 million, right? So less cost of acquisition. How much is the cost of acquisition?
75.
75,000. So any other incidental costs?
$400 for repairs.
Yeah.
And 1.1 for valuer's fee.
So other incidental costs. So you have 400. Hello, can
No,
you hear
Mr.
me?
Man. Yeah, you just came back.
Okay. All right. So I was saying 400 plus 1. What do you have?
That's 1.5.
You have what? 76. 500. What do you have?
33,500.
35.
Right. You have CGT at 10%. All right, so that's it for that one. So
Sorry, please. I'm still trying to understand why it's not partial disposal.
So that's the same question I was about asking. Because I
Because
think
everything there speaks to
partial
needing a partial disposal. There is a part of
actually,
undisposed property there, and we have we have the
yes.
sales proceeds, we have the cost of acquisition, and the part that has not been sold. So I'm still trying to understand why it's not
I think
partial
the
disposal.
examiner is a man, that's why
So
he gave us everything.
is a woman. Is a
No,
woman
if he's a
actually.
man, he will not give us everything.
Man,
So what this guy is actually trying to achieve here is this. He gave you that thing to actually confuse. What you are trying to do A over B times A over A plus B times C4 is to get an estimate of the cost of acquisition. Is that correct? Is because you don't have a cost of acquisition that is directly linked to the sales process you have. But in this case, this guy has already given us the cost of acquisition and said the cost of acquisition of the building sold was 75 million. So it means that the sales process 10 million, the building that was sold for it was 75 million. Do you understand? So you need not to go that route of A over B plus because you have a cost that is directly
Oh, I think
attributable
it's clear now.
to this
Thank you. Thank
process.
you. You just opened my understanding towards it now because everything is there and okay, it's
Yes,
fine. Thank you.
you're
Thank
welcome.
you. Thank you. I think I got it now.
Okay. So I think you can do the C on your own. You can do the 4 on your own, right? I don't think there's anything special in this 4. I don't think there's anything special there. It's rollover relief, and I believe you should be able to do rollover relief. So there's
Sir,
nothing
please, for
special
the
there,
sake of Benjamin, please,
really.
let's do it,
So
please.
please, somebody should drop
Please, sir.
your mail address.
Thank
Please
you,
give me
sir.
your mail address. Somebody should just drop mail address for me on WhatsApp so that I can send the solution to you. So that you can help me share
Okay,
with
for
your
this
colleagues.
rollover,
I don't have my WhatsApp here, and I pick it up with the system.
so are you talking about this last one?
Yeah.
Okay.
All right. Received. All right. Any questions so far? Yeah, let's move on. Now, something I want to note here. So the question speaks to when the tax is due. I said it in the previous class, but I just think it's necessary I remind you again.
Sorry,
Your file,
I just want to ask this solution. Are you not sending it to like the group chat?
I only need somebody to send me a mail address so that the person can assist me send it to the group.
Okay.
Yeah, you've gotten a mail address already.
Yes.
Yes,
You've gotten 2
I've gotten 2, so I will send it to. So I'll just send it to one person so that the person can help me share it to the group. I don't want to link my WhatsApp with this system yet.
No problem.
So, so when the tax is due, I said it in the last class, but I just feel it's necessary I say it again today. Your filing is done twice in a year. Your filing is done in June and December. Any transaction you do between January and June the filing must be done in June. Any transaction you do between July and December, the filing must be done in December. Do you understand? So a tax is due and the
Yes.
filing is supposed to be paid June and December. So your option now was done February 1, 2021. So the due date is what? The due date is June. This other guy, this transaction occurred March 15, right? So the due date is also June, right? Also, this transaction occurred August 12. So I believe, am I picking the right date? Yeah, like that's the only date I can see here. So
Yes.
August 12, that is December, right?
Yes.
And this one is done September 15, and that's also what? December.
Remember.
Yeah, so that's it. Any question? I said drop it to me personally. You went and drop it to the group. Is the group supposed to is the group? All right.
Sorry.
Now, I beg answer the person that is talking. Oh, you do that. You do that. Drop it to the group. Oh. So, any question? Yeah. Do you have any other question? I think we're good to go. Please, feel free. Always ask your questions.
Please, are we still meeting on Saturday morning?
If we will meet on, let me meet with you. You said you are the CR lecturer fixed class, right? So let me speak with
That's
you.
for 10. So we can meet by 7 if you can. I think so.
Okay, no problem. So I will communicate with you.
Mr. Michael, please, is there any update on case study?
Update on case study. To be honest, I don't have any update yet.
Because Kabri was supposed to join me to a group. Till now, he has not. So that's why I don't have any information on case study.
Okay.
Hello.
Hello.
Yes, just help us to look at tips and guides more on Saturday, so that we'll just tour around the revisions and see where we can capture and also be advised on.
Yeah. So I've always been advising you, but yeah, I will send the question and solutions, the more question and solutions to you. Yeah, so I will do the advice on Saturday too. Possibly we can look at how to write the reports and all of that. Yeah.
Good report, and possibly it's little area of a theoretical aspect.
Yeah, that's it.
Good.
So
And
possibly
talking about the theoretical aspect, I don't know if you can by Saturday we can look at tax audit also.
Okay.
Okay.
No
Thank you, sir.
problem. No problem. Let's see how it goes. All right. Thank you very much for coming. We've done a lot tonight. Thank you very much. I appreciate you. Thank you very much for coming.
A quick one, please help us come with where you have the solution pack, so that will flow with us with on solution pack.
Okay.
With that theoretical aspect, at least is your own.